All right, so welcome everyone to this live NFP coverage. Today is Friday, February 6th. We are T-minus 14 minutes ahead of the read. Here's what we're expecting from the U.S. non-farm payroll report today. We're looking for a print of about 228,000. That's off a previous read of 252. Private payrolls at 222 versus 240. Unemployment expected to hold widely at 5.6%. So we'll also be looking at the labor force participation rate, which has dropped as of the last couple of months. We're looking at 62.7. And obviously we'll be looking at average hourly earnings as well. So if you guys have any specific pairs or questions you guys want to look at, feel free to throw them out on the message board. We'll just take a quick look here at some of the majors as we get into the release. Here's the dollar index looks, guys, ahead of this print. So it looks like we're trying to make a test of a break of that channel support dating back to the October lows. You have 4 tags of support there. It's going to be a confirmed break if we do close below that today. You got a trigger break yesterday, but not a break in price. So again, we'll look and see if we can make a move below here. Keep in mind, guys, since the start of the month, the opening range, aside from today, has largely been 11,755 right into 11,870. So on a opening range type of trade, I know it's late in the week, but if we do get the push lower, it would put a little bit of a bearish bias. Now remember, the print is expected to come at 228. The focus really has been more so on the inflation picture from the Fed right now. So unless this is going to be a larger miss, you might not see all that much volatility on it. Here's what the euro looks like so far in overnight trade. It's been a lone drifter. We've been constructive on this one ever since the break of the opening range for the week. So on the upsides here. Long story short, if you look at the daily chart for the euro, we're stuck in a very precarious position. This is essentially the ceiling we've been butting up against, a 618 extension from the decline off October high. You also have that trend line or median line that dates back to the lows in June, tagged again in October, pivot break last month. And I guess now we can drop in the monthly marker here for February. Dollar yen, something we've been following for the last couple of weeks on the intraday charts. Still as rangy as you can find a pair in this really tight range. Major key resistance, the only thing I want to highlight before the release is 118.18. Obviously, if you break the weekly lows, you're looking at 116.15. But keep this key range in mind here for the dollar yen. Here's what we look like on the 30-minute. Okay, so an adjustment, I noted this on the report yesterday too, the pitchfork we've been working with since the start of the week still has us within the confines of that. Yeah, nice trigger break here last night, turn this things over again, but as is classic fashion ahead of NFP, you start to lose efficacy here on some of these moves. Again, on a strong dollar story, if you see it pop above this median line, we'd look to play, back towards that 118 level. But near term, I'd be respecting this structure that we're in. The Aussie, typically something I do like to trade for NFP, is not really on the menu for me today. We'll see how this pans out. The break above 78.25 does bode well for the longs. But when you look at this on a weekly basis, it's just tempting a break of the weekly opening range high. And you're not seeing too much conviction follow through on that move. So while I do think you do see a snapback here in the Oz, you need to see a little bit more of a conviction break through that opening range high. Gold will also be a mover with the dollar, and also typically when you see major fluctuations in the dollar. Here's what we're looking at for gold. We've been neutral on the intraday page for this for the last 3 days, ever since the break back below this invalidation level. So you guys remember, as we headed through this was the bullish invalidation level. We surpassed it last week and rebounded right through it. Thought we could get another bounce, but the break back through has us neutral. So for the last 3 days, we've been sitting here with a neutral stance, thinking you might get another stretch into the lows here to offer some possible long opportunity. 1237 is going to be the bullish invalidation level for the broader structure we're in here. You have lower median line parallel, you have the December highs, and a basic 50% of the decline off of the July highs. So some interesting pairs to look at as we head into it. Euro-yen hasn't really been on the menu for me either. We talked about this briefly in the room here yesterday, guys. With the push through here, you can see that took back the entire move. So again, trade that might not be primed quite yet. for a topside push. But certainly with today's data, you could see the yen start to show us some movement here. All right, so guys, those are kind of the majors I'll be looking at. Let me know if there's anything we didn't cover. The British pound, almost forgot. We were here yesterday. If you guys remember, during the webinar, we talked about this near-term resistance level, 53.20. You also had the upper median line parallel. You actually did push through that towards the end of the session, but it's been a snoozer ever since. So keep that level in mind on the daily chart. Again, it also represents that 786 long standing retracement. Next level up, 53.83, if we do see that push higher. Oops. Got a soft target at 53.68. Almost forgot about that. That's the 50% retracement of the near-term decline. But that 618 comes in just higher. Okay, we got about 9 minutes, 8 minutes to be exact, ahead of the release. Again, guys, if you have any questions or trade setups, feel free to let me know. I'll be more than happy to run through those. Keep in mind, as we get into the data, I'll read that out for you real quick. You'll see the release here as it hits live time. And then we'll get up and we'll see if there's any bank research wires following up on the release. A question from Tuttle saying, good morning, Michael. Dollar CAD, daily RSI is above trendline support going back to last June. You're talking about the daily? Yeah, okay, let's take a look. Okay, sorry about that. Charts want to think here for a minute. Let me see if I can bring it up on another chart. Oops. Doesn't look like Market Scope's having a good day here, guys, so just bear with me real quick. So, Tuttle, I'm not seeing that trend line that you're talking about. RSI is just above the trend line support dating back to last June. Okay, so here's June. I'm not sure which trend line you're working off of here, to be honest with you. I'm not sure which daily chart you're working on for the dollar CAD with the trend line support off of June. On this one, oh, that's probably white. Thanks for that, buddy. Dollar CAD is what we're looking at. Sorry. All right. Yeah, that makes more sense. June. Right on. Actually, I do have this on my charts. If they're back. Okay, they are back. Awesome. Dollar CAD. Right. Yep. So we're there. Not only that, Tuttle, but actually a break to the downside will give us a weekly opening range break, right? If we do surpass those lows, basically just surpassing 124. Chintan's asking when the webinar starts. Chintan, we are live. I hope. You can hear me, Chintan, but for the dollar CAD. So we talked about this earlier, right? This is what was concerning for me, is the upper median line parallel here that broke as resistance. It's been a pretty nice formation, caught the lows, caught the highs here. We were sitting on it as support. I don't really know if you want to count this as a break, Tuttle. Chintan says, did I miss much? No, you didn't, Chintan. We're about 4 minutes ahead of release here, man. You're right on time. So, Tuttle, it's not really been a trade I've been focused on, to be honest with you. I don't really like the stretch nature of it. Despite the ATR 152, you're actually getting that ATR read on a lot of the other dollar crosses, interestingly enough, where the dollar CAD ATR is typically smaller. Obviously, you've seen this nice stretch to the upside. The only thing I want to point out here is basically the weekly opening range. I don't have anything significant until 2280. On the upside, nothing significant until 2650. So let's drill down here in dollar CAD. Okay, so here's the weekly open. You saw that drop. There's that 123.93, 618 extension. That's a near-term one, catching the lows. Maybe we can give some structure to this. Could be the operative slope, right? Catching the highs here on the pullback. There's a median line catching support. Okay, that's sort of what I'd be looking at near term for the dollar CAD. Tuttle says only thinking about shorts if it breaks down. I agree with you. That's the way I would look to play it, especially on the weak dollar story because it's so stretched. I think you could get a move to the downside for sure. My only contention again is you'd really want to see this thing just break the opening range for the week. We're not too far off it. A median line break here would have us looking at the lower median line. That would be a way to play it. Let me adjust this retracement, and we'll tack on a quick extension here. And see where these levels come out. Okay, so the 618 gives us a nice cushion region just into 2284, basically the 23 handle. So those are sort of the zones I'd be looking at right now, Tuttle, for downside targets. Especially depending on where we are in time. And a downside break looking for the lower median line parallel. It's basically looking at like early next week here on the 7th. Again, just as a disclaimer, guys, when you're looking at these event risks, triggers are not really the best way to operate. It's really going to be more of a real tight, close study of price action. These triggers, they're not really meant for real near-term trading, such as event risk trading. Obviously, we'll bring up the 5-minute as we head into the data print. We'll take a look at this to sort of gauge, what we want to be looking at as far as the near-term price action is concerned. But just keep that in mind. As far as the triggers here, we might set them up. You might see a couple dribble here, but you really want to be focused more on near-term price action, highs and lows of the session. Again, the euro opening range for Europe is really tight. You got a high 114.60, 114.70. You got a low 114.30. So you have a 40 pip range here for the European opening range, which is still intact. We could see a break of that, give us some room. So here we go. About 30 seconds out, guys. Again, looking for non-farm payrolls to come in at 228,000. Looking for unemployment to hold at 5.6 and the participation rate to steady at 62.7. Survey says just under 15 seconds. Do you scalp news events or have any strategies? We'll go over any positions I do take. I'll walk you through it. You have to be a little bit nimble, and I don't really rush into it, so I let the sort of dust settle before we get started. So 2 seconds out. Survey says 257. Stronger beat on the non-farm payrolls. Unemployment upticks to 5.7%. Labor force participation. Here's the problem, guys. 62.9 is a nice. It's a nice uptick in the participation rate. So broadly strong data here for the dollar, guys. And here you're seeing obviously the euro plummet lower, 113.90. Wouldn't be chasing that, guys. Be careful on that euro move. Aussie with a turnaround here at 78. Sterling yen with a nice reversal here. Euro Aussie does look like we're seeing that reverse. And dollar Swiss. Let's see what the pound did. Okay, the pound broke the opening range low for Europe as well. So now that we have the dollar strength story is the focus, a stronger than expected print on all counts. You got non-farm payroll is beating. The unemployment is the only concern here with the uptick, but the caveat here, guys, is that uptick in unemployment was accompanied with a move higher in the participation rate. So inherently, when the labor force participation actually increases, that puts artificial upward pressure on the unemployment rate. So I don't really think you'll see too many people concerned about that 5.7 uptick from 5.6 on the back of this labor force participation run-up. That being said, it is broadly a dollar positive story here. So when we buying pullbacks, if you take a look back at the index, would expect to see us right above that trendline resistance again. Here's that bounce in dollar CAD total, so be cautious. Doesn't necessarily mean we'll continue to favor the dollar strength right into the end of the session, guys. This is how event risk works. So just use some caution here, noting resistance at that upper median line parallel. Here's the dollar index looks like. Not surprised to see us pulling right back in the confines of this formation. Near-term resistance is still 11,085, so you do have some room here if the dollar pushes higher. And if we do clear, okay, yesterday's range, that would be an outside reversal at the lows. So keep in mind, we'll be watching today's candle here with great interest for the dollar index. Guys, if you have any questions or pairs that you want to look at, do let me know. Here's the euro-dollar trendline support off the weekly low, or last week's low rather. Comes in just beyond where we are right now. I want to highlight this region for the euro. Excuse me, for the euro. Into the weekly opening range low. Okay, so this is your gap open, and there's the opening range low for the week, 38.2. We're going to go ahead and tag on a quick retracement. Sorry about that, guys. A little lag on my end. Okay, some bank research saying dollar strengthens against the yen, euro on January jobs data. Payrolls print, or November private payrolls print at 414,000. It's the biggest since September 1997. Okay, I'm not sure if that is a off print here. Okay, keep in mind we also did get Canadian unemployment data. And here's what that looked like, guys. You had unemployment, which downticked to 6.6 from 6.7%. So for Utah, looking at the dollar CAD, net change came in at 35,000 to the upside. Remember, we did get a contraction here last month. That contraction downwardly revised for Canada from negative 4.3 thousand to negative 11.3. Let's bring the dollar CAD back into view here. Okay, so it's a mixed print. It's interesting to see what the dollar CAD reaction is going to be. You did get a nice boot or a nice kick here to the upside for Canadian employment. I'm thinking a lot of people will be looking at this downward revision to last month's weaker than expected print to begin with. But I wouldn't necessarily want to hold on to the weaker CAD story moving forward. So I'm not going to be really interested in playing this rebound. Tuttle, I'm with you. Might be opportunity to sell here. I want to see what this thing does as we head into the U.S. Open. But the data for Canada, not all that bad. Tuttle says, thank you, very helpful. Brian says, there you go. Thanks. Just watch price and see if it comes into a level. I'm with you on that. Where do you have a topside resistance for dollar yen? Good question. So topside resistance, the main resistance near term is going to be 118. We just went through that. Remember on the daily chart, you're basically looking for 118.90. This is the level that we were talking about a couple of weeks back. Charge the turn. If you guys remember, we actually caught this one really nice on the downside. Nice confluence here, the 100 off the low and a 618 off the high, and that's 118.91 into 118.82. So it's 10 pip range right here. I wouldn't want to ignore the highs that we made late last week. That takes into 118.50. It might be an initial target here, but that's the extended target. You stay constructive while above 117.50 near term. Not bad. Not bad. Okay, looks like the Canadian dollar is extending some of those losses also after the jobs data from there. Okay, so from here on out, what scalps are we available to take today? What could we be looking for? So you know that the data came in positive for the dollar. I do think you get a little bit of a respite here as you head into the U.S. Open and get a pullback. You can probably look to play the long dollar positions again. I'll be watching the index, and as the index heads into the weekly highs, into the monthly highs, I'm still going to be reserved. Remember, NFPs is very, 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 or any data, guys, is very rarely going to switch, alter, or reverse a broader trend. Okay, if anything, sometimes it'll give you a reset to be able to jump into that position. So I don't want to necessarily just look to play dollar longs. If we look at this objectively, guys, we haven't cleared the monthly highs. We haven't cleared the weekly highs. You still have a key resistance range that we highlighted weeks ago up here, really capping the advance. So I just want to curb your appetite on dollar long positions for a longer term position moves. From a scalp basis, I do think we have opportunity here as we head into the U.S. Open. Brian says euro in a buy zone. Yes, so again, that trend line support off the monthly low. This is obviously going to be the yearly low. Remember, 110.95. Do you guys remember that day? You guys remember that day? I actually tweeted it that Sunday open as we hit that level. Okay, that level represents a long-standing Fibonacci ratio. I think it's the 618. Let me take a look here. 100% extension. This off decline from 2011 highs, 110.95. So that's the major key support that we rebounded off of, guys. Remember, this is still the level that invalidated it. Okay, invalidated the bearish camp, and that's still what's going to keep us from taking too aggressive of a short stance. Above 112, 112.20, 112.10. I still think that you're risking a little bit of recovery here for the euro. So to go along with what you're saying, Brian, yeah, I do think near term, if you see some settling here, we'll keep an eye out for some triggers. Let's bring up the near-term time frame charts here. We'll bring up a euro. Yeah, it's going to be tough to get a trigger off this one post the break. But remember, on these trades, some things to take note. The 30 break in and of itself back above 30 will be a nice opportunity, I think, to get a little bit of a stretch to the upside. You do not want to take a stance on this, guys, and think that you're going to go into 119 on this move here for the euro. It just doesn't work that way, and I'm a little bit more cautious from my end. So from a scalp perspective, I'll be waiting to see if we can get any type of triggers to the upside at 30 break-in momentum. As long as this condition holds, I'm not going to fight it. And, Brian, take that for what it's worth. You might actually get a great opportunity to get along here from me. I have to maintain discipline with my near-term strategy. So, I've seen this happen a dime a dozen. This can stay down here for 20 minutes. You come back up, it tests 30, and then it just rockets down for another 30 pips. So I need to really see this thing recover from oversold conditions before I start to fight it. Okay. Also on a near-term stretch, and sometimes this can be very helpful as well, just see if you're running into any ratios. And lo and behold, do have that 764 retracement just below the lows we made. Actually, if you adjust this to the actual high. Yep, right there. Let's take a closer look real quick at the 1 minute. Some improvement here. Remember, a lot of times you'll see these mini structures take out in price action, guys. It looks like a little triangle taking place. Remember, these are typically continuation patterns, not always. But I wouldn't be surprised to see another throw over and then this thing rocket down. Guys, I'm not going to really focus on the euro dollar. If I'm trying to trade this right now, I'm a little bit more hesitant on trying to take a stance on that. Dollar yen is a really nice stretch, taking us right through our targets. So I'll be looking at that as well as we head into the U.S. Open. Come on. $118.50 on tap. Wow, no respites for the dollar yen, huh? Okay, so once this thing makes a teeter, okay, maybe some divergence, maybe heads into 115 and halts, you tack on a quick retracement of the actual stretch near term, you see a basic 236, and that's your initial target. Once you get into that 236, we take off a quarter of the trade, half the trade, bring the stops to break even, and see how deep you can get. but you need some sort of near-term conviction of a turnover, even if it's only going to be intraday, very, very temporary in price. I'm just not seeing that here yet on the dollar yen. Dollar Swiss. For those of you trading this thing. And of course the euro. Okay, so the 1 minute is trying to make it break back above 30. Looking good. Take it back to the 5. Still a ways to go. And the reason I want that, guys, and the reason I want to see some sort of signal and momentum to the near-term upside is because of this. You have nowhere to put a stop right now. Okay? If you put a gun to my head and say, Mike, where do I put the stop? I'm going to have to tell you 110.95, which is like, a couple hundred pips away. So we don't necessarily want to take that stance, but at the end of the day, you really do need something to tell you to take a counter trend trade, guys. I'm not going to fight this and try to catch this dropping knife just yet. And you see, there it goes. So Brian, that continuation, right, or that consolidation, this is getting messed up already as it is, and this thing turns right back down. So I think you get an opportunity here for the euro. I'll need to see what the U.S. Open looks like for that. I still think that yen is probably going to be your best shot here. Here's a quick look at the relative performance so far, guys, post that release. Okay, this is the dollar relative performance. You can see that the dollar is stronger across the board. Biggest loser so far in the session, euro. Second biggest loser, yen, Swiss franc, Kiwi, and the Aussie a little bit less. British pound down 0.42%, and the Aussie pretty much unchanged. What does that tell us? The Aussie probably is still primed for a long position. So if we take a look back on the Aussie, despite all the losses that its major counterparts has seen, this thing is pretty much flat in the session. Here's what the dollar, or the Aussie dollar looks like. We took back those gains that we made for the Aussie, still positive on the day by a fractional amount on the intraday. Looking like this, right? And this is why, right ahead of the release, we were looking at this. I was saying, didn't really trust that weekly opening range break. Just didn't trust it, right? Didn't get any momentum really breaks to get you up above that region. So the Aussie, I think you let it reset, try to get back on the long side. I know that Jamie, my man's looking at 76.90, somewhere around the 77 handle is basically what he's looking at for support. Obviously, that's going to be a nice swing low here that you made. But for the Oz, another thing we'll be looking at is this. If this thing comes into 40 and finds nice near-term support, and on the 5-minute you get a trigger, because of the lackluster action that we've seen, because of the fact that every other counterpart's weaker against the dollar except for the Oz, that gives you a tell that despite the strength that you're seeing in the dollar here, it's not really able to budge the Aussie out of its major range. So again, I think this one is another one I'll be interested in possibly looking for long exposure as we head into U.S. session. Questions, guys? Feel free to throw them out. Feel free. No, nothing's nothing's taboo here. Brian says, I like it. Thanks. Keep me out of the whiplash. Maybe sell on the break of the lows. So, Brian, you're still talking about yen? Brian, or were you talking about the euro? The euro. Yeah, so for the euro, yeah, I really can't even say I'm with you on that. Even if if it breaks this trendline support, maybe you look for a run into the weekly opening range low. That's something real tight. My problem with it is this, Brian. Where the heck are you going to put your stop, man? It's just not. It's no longer scalpable for me from this range. If you're going to take a long side approach against the opening range low, that's something I'm interested in, personally rather. But I wouldn't necessarily be interested in jumping on the short side here for the euro. Remember, the dollar is still at resistance. In fact, if you bring this into a 30-minute chart off the weekly highs, come on. Okay, so this is a 30-minute on the dollar index. Actually, this is actually a good opportunity to see what's been going on here. So your classical corrections will give you equal legs down. I just want to see if there's any type of Fibonacci relationship with the low that we just made, and then we'll tack on a retracement and see if there's any targets on the way up that seem interesting. Okay, so you overshot the 618 by a little bit. Not going to stress that. Tack on a quick retracement. And you completed exact 50% retracement. My point being, guys, for looking at the dollar index is this. I don't necessarily want to jump on the dollar strength story because there's nothing here that's invalidated the broader trend yet, right? You have no push for what's the word? For continuation just yet. We have a squawk for the pound, 52.20/50, says Jay. I saw that from Jamie just now. I'm talking to him on the other line here. So let's take a look at the British pound. And we have the same region highlighted. He's looking at 52.50.20. I'm looking at 52.58/52.70. Okay? Keep this level in mind, guys. Median line bisector, very, very clean. A 38.2 retracement off the high, a 100% extension just off the advance off the lows here. Nice pivot in price, catching the initial January high that you made there on the 14th. And momentum's at 40. Actually, this might be a nice entry, guys, here. So let's see if we can jump back in the near-term chart. We'll see if the 5-minute offers us any type of triggers. It might be a good opportunity here. So here's Aussie. There's the recovery back above 30. Real quick snap. Any longs you take should be against 77.80 here. It's 40 pips on the upside. It's a little bit too big. Wish we would have caught this a second ago, but let me just get back to the pound real quick. Okay, again, I don't stress these triggers, guys. I just draw them for reference. So make sure you're keeping that in mind. Nice pivot in price right there. Okay. Stops against 52.58 here for the pound. Dun, dun, dun. Okay, so you're going to take a stab at this one for that pound. We'll see how that rally looks. Again, it's a pretty major level that we just talked about. I tweeted this chart out on Daily FX the other day, so I'm going to take a long on this one here. We're going to see, if you can get the initial targets, guys, you really want to look first at 53.10. This is scalp, by the way, guys. I don't want to, intercede. If some of you are taking a longer-term stance on this position, I don't want to shake you out of that. But for me, near-term targets, 53.10 on the upstretch here will give us the ATR, the quarter of the ATR that we're looking at. But essentially, if we take it back to the scalp chart here on the 30 minutes, there's that 53.20, which is again going to be a big region. And then I'm looking for a rally into this, 53.68. I think actually this is where you might see a larger turnaround for the pound. So I just want to caution you in trying to get too aggressive on a stance here, guys, to hold this for a longer duration. I'm just using this as a scalp near term, trying to fade some of this momentum to the upside. Questions on any of the pairs that we're looking for, any of the reactions we're seeing, dollar crosses, and the like, guys? Feel free to throw them out on the message board. DB, sorry, missed your comment earlier. Oh, and Ari, sorry about that. Says Kiwi dollar and SPOOs, please. Yes, coming right up. Kiwi dollar looks like this. Okay, very similar reaction. This is the 5-minute looks like. Let me jump back into the scalp chart here. Let's see what the Kiwi we're looking at in the near term. Right. Wow. Okay, so what I would call this, guys, is I would call this a test and a rebreak of the opening range. So here's your weekly open. You press into a high. You make a new low. You test the high, it holds for a couple hours, you break right through it. That same day you tested as support, the opening range holds support, you continue to look higher near term. The pullback here didn't quite make it into the opening range high. Would have necessitated a move into 73.22, but the reaction that you're seeing here, again, does suggest that you could be seeing that be a major level of support near term for the Kiwi. So let me take that 5-minute chart back. And fortunately, at this point, I don't really know if there's much room. You're right slap in the middle of the hourly range, not even the daily opening range, right? So I don't necessarily have a play for me here. If you get back towards that 73.60, a stop against 73.37 is a pretty tight stop. You might want to play. To be quite frank with you, Ari, it's not something I'm interested in per se right here. Bring it to my attention again if we find it coming back towards that low to get a proper risk-reward ratio to try to play on the upside. I just don't like doing anything when the market's right in the middle of the range here after the data. So this is one where you want to let the dust settle and then try to get next to the poles of this move right here, basically. Ari, does that help? I wish I had more conviction on you. For the SPX, let me show you what that chart looks like. Here is Spoos. Don't know if it's updated, this chart here, but let's take a quick look. Right. Woof. Lord, oh Lord. All right. So that blue line that you see represented, there's a long-dated extension. Okay. This dates back to, if I'm not mistaken, I want to say 2008. I could be lying. Hold on one sec. Okay, way older. 2002. Okay, gave you a 173.2 extension right up here. We've been finding some decent pivot action on it over the last couple of, well, since the start of the year essentially, right? Here's January, resistance. Here's trying to break through those highs that you made for January. So on a move like this, I don't really scalp the SPX. I will take a quick look at this for you, Ari, near term. I'm just going to bring it into a 2-hour chart, see if that extension to the upside gives us or yields anything. Okay, whipsaw action. That sterling dollar position keeps going up 15 pips, back to square, up 15 pips, back to square. So let it settle. Okay, I'm not going to really stress that right now. Our stops are in play, and if it gets through, we'll gladly take those positions off the table. So 100% extension takes you into 2072. So you're not out of the woods just yet here, Ari. But essentially in a topside break beyond that, I'd be looking basically for a move right into 2092 again. Let me just see what this looks like, guys. It might look a little messy. Bear with me. Okay, 782 is right there. I'm going to add an 88.6. Clean this up. Boom. There's your topside objectives as long as you stay above today's high so far, or today's low rather. But broadly constructive signature. Even if you take a look at this, guys, this is a 2-hour chart, by the way, but these triggers work on all different time frames. And again, graphical representations of a change in behavior, a shift in momentum, and there's that break again, coincided with a really clean trigger break right here, giving us an upside bias ever since that trigger break, which, by the way, was accompanied with divergence into the lows. Okay, ever since that trigger break, 60 break in momentum, 50 hold in momentum, 60 break in momentum, you're continuing to look higher. Continuing to look higher. All right? Just note that you're at resistance here, so I don't want to get crazy about it. But the momentum signature still looks pretty constructive. Ari says, thanks. One more. On the daily dollar yen, do you agree that a break of 118.90 will confirm the triangle is complete? Dollar yen. Where art thou? Dollar yen. Oh, wrong charts. I would say so. Ari. Objectively speaking, of course. If this thing were to clear 118.91, yeah, I think that would be a confirmation break of at least this trend line. I don't want to necessarily say the whole formation will give out, but yeah, I do think that if you see a break of that, that would, at least in my mind, validate that trend line break. It's just that the dollar yen is notorious for this kind of stuff, guys. So I'm a scalper of dollar yen. I don't take longer term stances on this pair. At least not in these types of conditions. You know, on a trade like this where you get a major break of a fresh yearly high, you kind of let it sit down and you kind of just bring your stops up as the market moves. But we've been, since the start of the year, since December really, in a crazy radical consolidation. So I would agree with you. 118.90 break on a closed basis, Ari, very important. Closed basis, in my mind, would give me a little bit more of a conviction topside bias here for dollar yen moving forward. So I hope that answers your question. Dale says it looks like yen is topping out against the U.S. dollar. I'm not sure what you're basing that off of, Dale. If you want to give me some more information on what you're looking at, you know, I don't necessarily try to make any type of assumptions on what I think is happening. I want to see what price action is telling me, and that's all that matters. Excuse me. My opinion on what I think price action is doing is irrelevant, unless I see something from a technical standpoint, from a price point standpoint that's turning over. You know, that's where I would start to take that approach, Dale. But right now, this thing is still gung-ho. Momentum is still an overbought condition. Not my cup of tea. DB says, trend line only has 2 touches. Not really a valid trend line yet. DB, I'm not sure which pair you were talking about with that one. Let me know if I missed it. Brian says, all good, thanks. Jay Jackson, I got your question. Fernando. Oh, DB says, Mike, that was ages ago. Sorry about that, DB. A little excited here when we get these released. What would your stop be for the sterling dollar? So for the sterling, stop's going to be against the lows, guys. That's how you trade this event risk. You really can't trade event risk against major fib levels or things like that because you'll get run-throughs all the time. All the time. So my stop's on an auto stop, guys. I have it on the platform. So anytime I jump into a position, it automatically places the stop. And I don't think that's turned on because my stop is not here. Oh, my God. Okay. Yeah, okay, so I'm using, I restarted or reinstalled the platform. I don't think I turned that feature on. And we will put that stop right below the lows. Damn, that dollar yen just keeps ripping, huh? Like no one's business. Okay, 52. This is 52.58. Okay, so I just want to review again, guys, our risk to reward on the trade. The entry was 52.77, all right, and a 30 pip stop from that puts you into somewhere in the 52.40 range. I don't need to press the entire 33 pip ATR because I know what my risk is going to be against the low, so I'll give myself a little 5 pip barrier here, and we'll call it even at 52.51, 52.50 here. You know, that's how I like to play these event risk trades. So the trigger hasn't panned out in the 5-minute. If it does, that adds conviction to the trade. Once we get a first 30 pip, 20 pip, 25, 30 pips, basically as we head, guys, into the ATR, we're going to go ahead and bring up our stop and to break even, maybe take a quarter of the trade off, and we'll play it from there. Still looks pretty good. All right. Fernando, I got your question. Ari, I got your question. Okay, where do I have topside resistance? Chris, I got your resistance. Okay, so we're all caught up on the message board, guys. Feel free to throw out any other questions that you want to look at or review. Aussie is still the one I'm interested in playing upside as well. This looks like it was a great entry, but still, as long as you hold the weekly opening range, I really can't get too excited about trying to fight that one. What does the odds look like near term? Yeah, we're still right slap in the middle of that range. All right, guys, so it is 9:02 in New York. We have just under 30 minutes before the start of U.S. trade. I do want to open up the floor one last time. If you have any questions or trade setups, pairs you want to look at, strategy questions, guys, feel free to shoot them out. Be more than happy to take those for you. As far as the economic docket is concerned, we're pretty much spent for the remainder of the session. Lockhart speaks on U.S. economy in Naples, Florida. That hits later this afternoon at, 12:45. Consumer credit hits at 1500. So we're pretty much spent in that. Into the weekend, guys, I just want to point out the economic docket here. You do get trade balance figures, exports and imports out of China on the 8th, right ahead of the open of next week. On the 7th. That's going to be tomorrow. On the 8th, you do get the current account balance and some data from the Japanese economy board of where is it? Current account balance and adjusted account balance. Okay, and the dollar index here with a nice rally, 50% of the decline that we saw off of this whole retracement you see here in brown is essentially the February opening range. So of the February range, that takes into account the yearly high and the low, for that matter, that we made this month, not the yearly low, but we've now paired 50% of that entire range. So something to take note of there for the greenback. Actually, if you look at this one, actually in a 30-minute, guys, it looks quite interesting. Thank you for the long-term 30-minute charts. Tuttle says, hey, Tuttle, you're more than welcome, man. I hope that helps. I think it was a great idea. I always appreciate your input, guys, and any input you do get, if it makes sense, it's going to be implemented. So I don't want you guys to feel any type of apprehension. If you have a great idea, you think it'll simplify the process, you think it'll make it better, feel free to let me know. So here's a basic trend line that we broke, but interestingly enough, you also had some slight divergence into lows here. Lower low, lower low, lower low, higher low. So that was actually an interesting move that we just saw. Watch resistance 11,800 here for the index. And the British pound is flat here, about up 1 pip, so we're not getting much play on that. And it might be one of those releases, guys. Again, I mean, there wasn't anything on the data front that was super surprising or super out there. We did get a beat on all accounts. The one thing I was really interested in, guys, is the upward revision that we saw. So I think this is the main thing that you're going to see dollar strength headlines today talk about the upward revision to the previous read from 252,000 to 329. Private payrolls came in at 320,000 versus 240 the month before. And the most important thing, or the takeaway I'm looking at, is this right here. An uptick in the participation rate, very welcomed, guys. Very welcomed. In fact, if you look at the participation rate, it's pretty dismal, okay? Participation rate last month hitting levels we haven't seen since the 1970s. Yeah, that's right. I didn't make a mistake. 70s, guys. All right? This is the last time we saw participation rate this dismal. 78. Okay, 1978. So for us to see the participation rate to uptick today to 62.9, it's really not going to stress the fact that you saw unemployment uptick as well. You guys understand what I mean? So when the labor force participation decreases, it puts artificial downward pressure because the labor pool is smaller. So inherently, the people who are inherently the percentage of those employed will seem bigger, and it's going to skew that unemployment rate. So on a trade like this, or on a chart like this, rather, it's more than welcome to see a little uptick in unemployment if it comes alongside a broader widening in the labor force participation. So I think that's what you'll see the headlines run with today. Broadly a positive dollar story. Again, the scalp that we took here, remember, where stops are just below that 52.50 level. We'll keep that there, and we'll see if we can get the bounce. The initial targets are going to be up at 53.16, 53.20, just ahead of that, next to that low and that pivot that we made here, just above the 53 handle. If it breaks guys, and we move below 52, 58, 52.50, listen, look for a move into the lower median line parallel. On a rebound into the open of U.S. trade, if that gives you a trigger, you put a stop against that high and you try to play the stretch to the downside, would be how I would try to recoup it if we get stopped out. Long story short, the limits are in place, the stops are in place. I'm going to let this one pan out. So guys, if there are no other questions, we're going to go ahead and wrap up the room here. Live coverage or live sessions begin again next week on Tuesday morning, 8:30 Eastern, through Thursday. Again, we'll have our scalp webinars, and then Jamie Setley obviously on Wednesday with the midweek strategy session. We'll keep you updated on the SV Squawk Box. Let the opening ranges pan out here for the U.S. session, guys. About a half hour, about 25 minutes ahead of the open of U.S. trade. We'll see if we invalidate any of these ranges. That being said, looks like a broadly strong dollar story. Keep your eye on the index and see if we crack above that resistance there. Not on the 30-minute, but on the daily. Watch this region up here. Okay, watch this region up here. Next level up for resistance is going to be exactly yesterday's highs, which completes the 618 of the monthly range, and that's 11,825. So you might get that one last stretch into another push for the dollar. And that, guys, is the level that would make this a outside reversal candle on the day. So for sure, I'll be watching with interest on the dollar index. All right, guys, we'll leave it there. Have a great weekend. Safe trading today, guys. It was great to see you all, and I will see you bright and early on Tuesday morning for the intraday scalp session. Cheers, guys. Have a good one.